Venkataraman, co-promoter at IIFL Group, joins in the show right now. Venkat, great to have you on the show and congratulations. This investment by ADIA is valuing the home unit at 11,000 crore rupees. As per our understanding, the post-book value would stand at about more than 4,500 crore rupees. So what should be the price to book valuation that you're getting? And also if you could tell us about the profitability of this unit, Venkat.
If you look at this investment, Abu Dhabi Investment Authority has made in our home finance company. So they are investing about 2,200 crores and at a pre-money valuation about 8,800 crores. So post-money valuation, post-money stake of ADIA in our HFC subsidiary will be about 20%. If you look at our net worth, I think the net worth of the HFC was roughly about 2,700 crores. I think the exact figure is 2,673 or thereabouts. And so effectively post infusion of this capital, our net worth will more or less become close to 5,000 crores, 4,900 crores thereabouts. And so pre-money, if you the correct way to look at it is a pre-money price to book, and that was roughly at about 3.2 to 3.3. And just to give you a color of the HFC book, the total HFC book as on March 31st was about 24,000 crores. I think it was 23,671 crores. And the profit after tax was about 578 crores. So you can take it as a book size of 24,000 crores and a profit after tax of close to about 580 crores.
Right. So by when is the investment expected to come in, and any timeline that you could share with us for the same?
So now, as we disclose to the exchanges, this transaction is subject to regulatory and other approvals. So we believe that the transaction will get closed in the next 2 to 3 months.
How do you plan to use the proceeds?
This actually, as we have earlier also spoken on your channels, that the entire demand for mortgages and home loans in the country is robust, and there's a good runway for growth for this segment. And we believe that this money, this capital infusion, will help us to grow our loan book, help us to expand our branch network, and also make investments in technology, and also help us to reduce debt and improve our leverage ratios.
A little far-fetched questions. Any plan of demerging the unit and listing it separately going ahead?
See, actually, this is a question. Given the fact that we have an investor in our subsidiary, so it is. So it will take. So my guess is that the entire listing through the IPO or demerger process will take time, and it is up to the board to decide and take a decision at an appropriate time on how to give a proper exit to the investor.
Right. Good morning, Venkat. Real estate demand as well has been very strong. But do you think that the couple of rate hikes that we have, that the RBI governor has undertaken, could put a spanner in the works?
Actually, there's a very interesting question that you have about the impact of interest rates on the overall demand. So I'll just try to split the entire real estate market into multiple segments, because there's no one way to color the entire segment. And if you look at the entire real estate market in the country, there are multiple segments. You have the super luxury segment, the affordable segment, the mid market, and things like that. So our guess is that the premium segment the 90 basis point increase will make optically some impact, because for him the interest rates are very fine. It is about 6.5, 6.75, and there this interest rate looks optically high. But on the real other segment, which is the affordable segment, I think this 90 basis point hike is digestible. But having said that, if the interest rates continue their northward trajectory and go up even much higher, then we foresee some amount of pressure on demand. But as of now, we believe that the 90 basis point hike in the interest rates can be digested by the market.
Okay, fair enough. What about your disbursements? They were the highest in the fourth quarter, around 2,100 crores. What's the sense that you're getting for Q1?
Actually, it's very difficult for me to give a forward-looking statement, but I'll just try to put in perspective. Last year, in of looking at a quarter-on-quarter basis, if you have a longer time frame, then last year the loan asset grew at roughly about 15%. So we believe that this kind of growth, 15% rate, can be managed.
Right. Venkat, your home loan on a sequential basis grew about 7% in the fourth quarter, that is. How is it that you see this growing over the next 2 years?
See, we think that this entire, as I said earlier also, it's not right or proper for us to look on a quarter-on-quarter or a number, because some quarters, typically March quarter is generally good for all businesses because a lot of pent-up demand and closures take place. So on an overall period, as I said earlier also, the 15% growth rate looks to be manageable. Achievable, sorry, not manageable, achievable.
Okay, we got that right. Venkat, great to have you on the show and congratulations once again for this deal.